Hi everyone, this week I hit my investment goal for the year 2021. The portfolio now has a value of over 10,000 euros. In today's video I'm going over my full portfolio and giving some commentary on the stocks that I own. I started investing in the beginning of 2021 and built up my portfolio month by month. In my videos I show my portfolio every video with full transparency. So far we have made around 7% in profits or around 700 euros. By the end of the year I would like to reach a return of 10% or more. We got 2 more months, so it is still possible. I've learned on my journey that investing regular is very important. Each month new opportunities present and you run less risk of buying a lot when the stock market is on all-time highs. If you like the app that I'm using, try out the link below and get a free share which can value up to 200 euros when you open an account. My portfolio exists out of 3 different kinds of stocks: value, growth and dividend stocks. Sometimes these can overlap. So let's jump right in. The first one on the list is Abbvie. I own 6 shares of them. Abbvie is a healthcare company. They have been doing pretty well. Last earnings they beat estimates. They had sales growth in all their segments and above that they increased guidance for this year and the dividend also went up. This stock is for me a dividend stock. I invested in it to get some passive income to reinvest and get some solid stock appreciation along the way. For dividend companies I'm mainly looking for a good price to cash flow so that they can maintain their dividend and increase it yearly. Abbvie complies with this. The second company on the list is Alibaba, currently also my biggest holding. I got 9 shares of them. Alibaba is a well-known e-commerce company. Their ecosystem reaches way beyond e-commerce. Alibaba has been through a bumpy road caused by the Chinese government and US-China relations. In my opinion, the stock is undervalued compared to the growth they have every year. That's why I heavily bought them. They are even around the price levels of 2017. For now, Alibaba is lagging behind in my portfolio by 17%, but I don't think the Chinese government will punish one of their best companies so hard that they won't be able to recover. Jack Ma has also been seen lively again, so I think we can expect to see some upside sooner or later. I'm not planning to make this position any bigger at the moment because it has taken too much space in my portfolio. Alibaba is a value/growth play. Then we have Baidu. I own 5 shares of this company. A similar situation with them as Alibaba. Chinese regulations put them down in stock price by a lot. Baidu is a Chinese search engine like Google. The company is working towards new growth initiatives like AI cloud and intelligent driving. They have signed a contract with Geely to provide cloud solutions. Geely is one of the biggest car manufacturers in China. The stock is down 7% so far. Chinese stocks are slowly recovering, so I'm not too worried. Baidu for me is not a value growth play similar to Alibaba. The fourth company on the list is Boeing. Boeing is an airplane manufacturer. Since Corona, the company has not yet recovered from pre-pandemic levels. Boeing is more of a short-term reopening play. I think the company is worth more than what it is currently priced at. I'll sell the stock once it hit price levels again of $300 to $400. Carnival Corp is similar to Boeing. The stock price has fallen dramatically. It is currently 3 times less worth than pre-pandemic levels. The cruise lines had to shut down and cruise companies lost a lot of money. Given Carnival Corp's strong balance sheet and growing gross profit margins, I believe they will recover fairly easily. This company is also a value stock and I'll sell it when the stock is back to where it belongs. At the moment we are up by a good margin. Then we have the classic beginner stock. Coca Cola was one of my first purchases when I started investing. I wanted something safe to start with and a company with a great track record. Coca Cola is one of them. They pay a decent dividend of around 3%. Coca Cola is a value dividend stock, which also has yet to recover from pre-pandemic levels. I'll probably be keeping this one forever to showcase my respect to Warren Buffett. So far it gave me a pretty good return this year of 13%. Next we have my second biggest holding, Corsair Gaming. I've made a video about this stock before. The company is doing very good in their content creator segment. Corsair Gaming fell a bit short on their latest earnings report due to supply chain issues and increase in material costs. I'm not too worried about their future prospects. I expect the big growth of sales in Europe and Asia to continue. I'm a bit down on this stock, but I think we have bottomed out. The downside risk is fairly low at the moment given the good valuation. Corsair Gaming is mostly a growth stock trading at an undervalued to fair price. I believe cybersecurity will play a bigger and bigger role in society over time because everything is going to the cloud. Therefore, I invested in one of the leading companies, Crowdstrike. I really want to increase my position in this company. It ran up a lot already, so I'm waiting for a bit of a dip to buy more of the company. Because the valuation of Crowdstrike is currently high, I bought into a cybersecurity ETF to increase my exposure into the sector. The ETF contains a lot of different companies like Zscaler, Cloudflare, Okta and of course Crowdstrike. Now we have my favorite company, Daqo New Energy. This one also got hit in share price from the Chinese regulations, but recovered very quickly. Daqo New Energy produces polysilicon to make solar panels. They have been crushing earnings lately. So far, no love is given to the company. They have a trailing PE of 1.85. On top of that, I expect them to do even better in the next quarter. So we are looking at a forward PE below 1.85, which is kind of insane. Don't forget we are in the solar industry. This sector is mostly overpriced because everyone wants to have green energy stocks lately. I'll be buying more in the next months if the stock price stays the same. We are up currently 13% on this stock. Daqo for me is a growth stock mainly, but at this valuation I would consider naming it a value stock. Daqo also announced they might be paying out a dividend in 2022. I have high hopes in this company, that's why it is one of my bigger holdings. Here we got him, Intel. This one really is getting no love lately. The real problem is most people don't understand the concept of value investing. Growth or hypergrowth is not the only thing a stock needs. I agree that AMD is catching up big time with Intel. That doesn't mean Intel is not a good investment. Intel is not a growth investment, Intel is a value investment. Intel, in my opinion, is undervalued compared to its fundamentals and deserves a higher valuation. Sooner or later, the valuation will catch up to the fundamentals of the company, and that's how you get gains in value investing. They also pay a pretty good dividend, around 2.7%. Intel still has a strong foot in the business and should not be counted out just yet. The chip industry is growing and Intel will have its place in it. Kulicke and Soffa is another company in the chip industry. They mainly make semiconductor equipment. Last quarters they were growing their revenues and earnings very fast on strong demand. Kulicke and Soffa is also a supplier of Tesla. They buy back shares and pay out dividends. Next to all this, they have a pretty good valuation compared to their peers. This stock is a value, growth and dividend stock for me. I have high hopes and think they will do very well into the future. I have made a full analysis on this stock if you want to know more. Electrical vehicle sales are ramping up. NIO is the Chinese company that manufactures electrical vehicles. China has a lot of plans to go carbon neutral and wants a big increase in electrical car sales. I'm invested in NIO mostly for their battery swap technology, which is unique in the sector. People that do not have a garage will struggle charging their car. Battery swap can give a solution. You pass by one of the battery swap stations for 15 minutes and you are ready to go. NIO is also expanding in Europe. They are already operating in Norway and Germany will be one of the next targets. NIO is a pure growth stock to give me some exposure to the EV market. I'm a bit in the green on this one. Plug Power is my hydrogen play. We can't let the whole world run on electrical cars. We don't have enough charging places and batteries are also not the best for the climate. So I think hydrogen will definitely solve a part of this. I would like to increase my position more into Plug Power or a hydrogen ETF in the future. Plug Power is for me a growth story. The stock is up by a lot since they announced a lot of partnerships with different companies. VICI Properties is a real estate investment trust. They own most of the casino and resort buildings in Las Vegas and have recently made a deal with MGM Growth Properties to buy them out. VICI is one of my favorite dividend payers and I will be holding this one for the long term. They pay out a whopping dividend of 5%. Another dividend stock of mine is Walgreens Boots Alliance. This company owns pharmacy and beauty shops. The stock has dropped last years because Amazon would take over the pharmacy industry by selling online. Walgreens now has a new management team and is going for a full makeover. Walgreens Boots is a comeback value play that pays me a fat dividend. We arrived at the last stock of the portfolio and that is Walt Disney. Disney is a very strong company and has a gigantic entertainment portfolio. Disney is one of the companies I would like to hold forever. Hopefully they will pay some dividends again when all the pandemic drama is out of the way. Once the cruises and parks of Disney run back on full gas, I think the stock will move up out of their consolation zone. This was my whole portfolio. I hope you have learned something from it. Thanks for watching, subscribe and smash the like button if you enjoyed the video. If you have any questions, leave them down below in the comment section or send me an email. Below the video you can find a link to Book0 where you can get a free share when you top up your account. Take care and see you in the next video.